Hey, my name's James Nicholson and welcome to my YouTube channel. In this video, I've got some good news. Some mortgage lenders, in fact, 2 of the big 6 lenders have cut interest rates this week. And it's a great start to the new year because mortgage rates over the last 6 to 8 weeks have been creeping up. We had a great summer because mortgage rates were going down. That revitalized the market. But then we had so much uncertainty. We had Donald Trump elected, which gives uncertainty to the markets until he's in power in a couple of weeks. That will obviously, then we'll know what will happen with tariffs and stuff like that. But we also had a particularly bad budget, according to the markets, from Labour. That's given some uncertainty on what's going to happen to the UK economy. A lot of big companies have said they're looking at making redundancies due to the fact that minimum wage has gone up and the national insurance increase as well. So that meant that for the last few weeks, we've had interest rate rises from most of the big lenders. So now we're in 2025. It's great to see some lenders dropping rates. So who are they? Let's go into that and much more. Now, if you're new around here and you haven't done already, do subscribe to the channel over there and hit that bell notification. We've got new property content every single day. I'll keep you informed on what's going on in the market while teaching you about property investing as well. And let's get some video views on this particular video. Smash that like button, tickle that like button, do something to that like button. That really helps with the YouTube algorithm and helps the channel grow. So thanks to everyone that does that each time. So what's going on? Well, the markets are looking at potentially cutting more rates. Lenders are looking at this stuff now. And that's because they fully know that the property market is likely to slow down. Now, I've said in recent videos, there's going to be a flurry of transactions until March. You see, the stamp duty goes up in March, and so lots of people will want to get transactions complete. But most of those people probably already started those transactions in December or November. There'll be a few people that will be having new deals going out there, but now is going to be a period of time where lending does start to slow down. So lenders obviously don't want that. They want to finish the financial year strong, which ends in March. And so they're going to pull out the stops in order to try and get some deals over the line. So who are the lenders that are dropping rates? We've got 2. And I've got a third, which isn't a big 6. Halifax, they have dropped rates by a fairly decent amount. And for once, this benefits existing customers. So this is for remortgages, which is really nice to see because all big companies, you often see they look after the new customers better than the existing. So good work from Halifax here. And they are knocking off a sizable chunk, 1/3%. So 0.35% they're knocking off certain rates. Which ones? They're knocking off the 18-month deals and the 3-year deals, which is pretty good. So the best deal that they've got now is going to be on their 18-month deal. We did a video on that recently talking about this is a fairly new product for Halifax, and I think other lenders will do the same. You see, lots of people right now are being drawn to the 2-year deal at the moment. And that's because they believe that mortgage rates are likely to go down over the next couple of years. And they're probably right. The Bank of England has said they're going to drop rates 4 times in 2025. And the economy isn't looking particularly strong at the moment. So if we go into a recession or get close to a recession or unemployment starts to tick up, one of the tools that the Bank of England will use is cuts in interest rates. So you could have more than 4 interest rate cuts, or you could stick at 4, but they could be 0.5% each time. So their 18-month deal that they've got is a new product, but the rate is 4.22%. The fees on that are £1,500 or thereabouts. It's like $14.99, something like that. But that's a decent deal, and that's a good option if you believe that rates are going to go down. Now, you should always get a mortgage broker to look at your financial circumstances and see what happens if they don't go down. Because a lot of viewers on this channel have the belief as well that inflation is going to rise. That might stop interest rates going down. There's so many variables in this, but it's good to have that 18-month option. And so maybe that's something that you'll look at as well. HSBC are also cutting the rates. Another big lender. This is across all the rates, including buy-to-let rates. So Halifax, their buy-to-let rates are under a separate brand called the Mortgage Works. HSBC just have one brand, which is HSBC. And so under HSBC, this will include buy-to-let residential mortgages. They haven't said the rates and the prices yet, but tomorrow, have a look. Tomorrow, Tuesday, you'll be able to find out what they are. So I'm giving you the options so you can go and look to the market or go to your broker, because some of these lenders, you'll hear about a rate cut, but then if you approach them, they won't know what it is. If you go through a broker, which is what I always suggest, they will know of the rates slightly early, and they might be able to get you something that you couldn't get yourself going direct. That always often happens with NatWest. A lot of you say, I'll say a rate on NatWest. You'll say that doesn't exist on the site. You need to go with a broker to get some of these rates. So HSBC is another place that's cutting rates. And another lender that's cutting rates that you might want to consider is Leeds Building Society. They're going down by 0.25%. So that's another good positive sign, and that's really going to help a lot of people that are remortgaging. Now, these rates aren't as good as what we had in the summer. We had 3.99%, all these just under 4%, but they're significantly better than they were at the end of 2024. So things are moving in the right direction. Now, what do I expect leading up to March? I don't think you're going to see a major mortgage war going into the March stamp duty hike. I think a lot of these lenders are fairly busy dealing with transactions that they got late December, people that are trying to beat that deadline. And so they will have some business from that that's still going through the books, going through valuations, going through that process at the moment. But I do believe, and a lot of places are saying this, in April, I think the market is going to slow down significantly. And that's purely because suddenly you're looking at a massive increase, especially if you're a first-time buyer, in the costs of purchasing that home. Stamp duty will have some impact. Now, that could be countered if the market slows down and the mortgage lenders start fighting again to get that business. Then that could revitalise the market again and could counter some of that stamp duty increase. Anyway, if you see any lenders that are cutting rates that I should be sharing with you guys on the channel, always comment below. Always comment below with your thoughts, opinions, or even if it's just to say thanks or hello. I personally reply to every single comment on the channel. Do check out the Fundamentals of Property Investing. It's £25 at the moment, and that gives you all of the training you need to be a property investor. Right now is a good opportunity to get deals, and it's £25 at the moment. So do go and check that out, and check out all the other content on my channel, including this video right here.